You ready? Yeah, you got me running, you got me running, got me running. Shake it, shake it, shake it, baby. Raise your hands up, raise them up.
Hello, everyone, and welcome to Friday, the 7th of January, 2022. It is the currency call, and welcome back to all the regular viewers and the LCMS Trading Club members too. And make sure if you are watching this on YouTube with a delayed telecast that you do visit the Jindal Thai website and you get subscribed to the LCMS Traders Club. And an introduction as well to everyone that is new to the show. This is the daily currency call presented by Forex Trading Asia. And we go through the currencies as follows. So on Monday, it's the Aussie and Kiwi. Tuesday, the Euro. Wednesday, the Pound. Thursday, Yen and Gold. And then Fridays, we go through USD Cad, oil, and cryptocurrency as well. Now, just to get things going as well, before we get into the main points of discussion, there's quite a little bit to go through as well. We will be discussing, obviously, trade ideas and, of course, the NFP with Gimme. I'll just share the disclaimer as well, which is quite important, just because we will be sharing some trade ideas as well. So any information shared in this video is not intended to be a trade recommendation. It is solely the opinion and views of the speakers. So please remember to do your own analysis prior to entering into any trades. So just to kick things off, we do have the non-farm payrolls and employment data out for the US tonight at 9:30 GMT plus 8. We've got Kim Hong here, currency strategist with LCMS Traders, just to discuss, I guess, what to expect. Maybe a prediction as well, Gimme?
A prediction. Let me tell you this. It's going to be very hard to predict, all right? Anyway, happy NFP Friday, everyone. It's the long-awaited first Friday of the month, as usual, okay? Because it's the non-farm payroll Friday. So, what can we expect? Okay, let's just take a look at the economic calendar. Okay, and we can see that the non-farm payroll data, okay, is expected to rise. Okay, the previous release was 210,000 back in November. Okay, November's jobs creation was at 210,000. Of course, subject to revision. All right, and then in December, we are expecting 400,000 jobs being added into the economy. Okay. Why do I say that it's hard to predict approximate forecast project? Okay, two reasons. First reason, as you guys already know, the Omicron variant, okay, was discovered. Okay, actually hit us late November. Okay, and of course for the whole month of December. All right. So with the whole Omicron issue spreading, cases has been rising throughout the whole December, right? So is that going to have an impact on employment? Okay, it may actually have an impact. Okay, so if it actually causes or if it actually caused people in the US to be a bit reluctant to go back to work, okay, then we may actually be seeing a weaker figure this time around. Okay, but will it be weaker than the November's figure? Okay, that's what we are all, I would say, curious about. Okay, because the November's figure of 210,000 is really weak. Okay, it's really weak. No doubt it is still adding jobs to the what do you call that, to the jobs market. Okay, bringing the whole jobs market closer to its pre-pandemic level. But 210 seems to be a bit convincing to the general public that the whole jobs market is slowing down. Okay, so the first reason, Omicron variant, it may have an impact on employment. Hence, the data may not turn out as good as a 400K figure. Okay, now second reason, holiday season. All right, so I mean, if retail sales were to be good, which is highly likely, all right, during the last month of the year, due to festive season, okay, we may actually see a spur in employment, right? In this whole employment issue, okay? Because, you know, with more and more people shopping and things like that, it's a high demand. There will definitely be a high demand in employment, right? More manpower is required for, you know, coming in from shops, stalls, and things like that. And because it was an early stage of Omicron, you know, everyone do not have any, you know, everyone does not have any, what do you call it, expert advice on whether Omicron will be bad or good and things like that, right? I mean, not good for sure, but will it be, you know, towards the, you know, more contagious side of things? At that time, it wasn't clear yet. So people may still be, you know, going back to work, may still be shopping around and things like that. So, you know, with the holiday season coming in, well, at that time, okay, it may actually spur employment. So hence, you know, because of these two reasons, okay, Omicron uncertainty and holiday season, okay, data may actually be better than previous 210,000. It may actually be worse than 210,000, or it may actually fall within 300 over 1,000, which is why, you know, when Scotty asked me for a prediction, you know, a crystal ball figure, I'm very reluctant to give it, okay, because I myself feel that this is a very, I would say, sandwiched situation, okay? So with this whole tricky situation going on, right, will we be seeing movements, all right? So personally, okay, before I go into that, okay, before I go into the whole movement thing, I would like to bring you guys to the attention of the Wednesday's ADP figure, okay? So on Wednesday, there was this ADP non-farm figure being released at 807,000. It's actually double of the expectation of, I think, 400,000, okay? So can we actually use that as an indicator to tonight's NFP figure? Yes, we can. Is it reliable? During this period of time, I would say no, okay? Because there's just simply too much uncertainty going on, right? Omicron, COVID, you know, ever since the whole COVID issue come in like it's not last, it's 2020 March, okay? The ADP figure, okay, seems to be, I would say, missing quite a bit from the actual figure, all right? Or rather, the actual figure seems to be missing quite a lot from the ADP's release, okay? So I wouldn't use the 807 as a, I would say, an indicator of, you know, how this NFP will turn out to be later on, all right? So just try not to use that 807K as a strong reliance, a strong indicator to, you know, whether tonight's figure will be good or bad, okay? And the thing that I want to talk about next is the impact on the FOMC. Okay, will this jobs report have an impact on the FOMC? My personal view is it is highly unlikely because, okay, the Fed has already expressed its very, very, very strong stance that they want to taper. Okay, that's one thing, and they want to increase rate at a faster pace. Okay, probably 3 times this year. Okay, so Fed wise, we need not worry about that too much. Okay, and I'll go through more on it when the Federal Reserve meeting draws near. Okay, so what should we, right now at this calendar, we see non-farm payrolls, we see participation rate, we see unemployment rate. Okay, and of course we see the average hourly earnings. The most important, in my opinion, okay, piece of data to be focused on right now, later tonight, is actually the participation rate. Okay, if you want to know if the Omicron issue actually has what kind of impact on this US jobs market, then we will want to pay attention to the participation rate, okay? Because an increase in participation rate will imply that more people are going back to the workforce, okay? Labor force coming back to work, right? On the other hand, a decline in participation rate, may actually imply that, well, the Omicron did have an impact back in December last month, okay? Because, people are leaving the workforce, okay, leading to a decline in the participation rate, right? So because of that, may not be that good. Okay, it may not be that good. It may actually have an impact on the US dollar. Okay, So tonight's data is going to be tricky. Okay, so what kind of data will it actually move prices? Okay, move the US dollar. I would say data that deviates away from the 400,000 and the 210,000. Okay, now hypothetically speaking, okay, suppose the actual figure turns out to be way better than forecasted. Okay, what does this mean? It means people are not so concerned about, were not so concerned about the Omicron variant back in December. Okay, and because of that, all right, and with the recent release that the Omicron variant is not as deadly as the Delta variant, which is actually good news. Okay, that may actually spur more optimism in the US jobs market. Okay, so any figure, way higher than 400, the forecast of 400,000 we may be seeing a strengthening in the US dollar. Okay, however, all right, if let's say the figure turns out to be lower than 210, okay, that is actually the complete opposite of what I've just mentioned. Okay, it means people were actually concerned about this whole uncertainty. Hence they are not going back to work. They are leaving the workforce and things like that. That may actually lead to a temporary weakening of the US dollar. But the weakening of the US dollar may not be sustainable, okay? Because remember, ultimately, the central bank's monetary policy has the biggest impact on currency movements, okay? And with the ongoing, hawkish tone from the Federal Reserve, okay, and the expectation that QE will end in March, any weakening of the US dollar may actually be for a short period of time only. All right. So pay attention to the participation rate, and of course, look at the employment figures as well. If it deviates from the 400,000 and the 210,000 figure, okay, there may be there may be quite a bit of a price movement. So nonetheless, I will still be in the club tonight, okay, to break it down as quick as I can and see how how price will move. All right. Any questions on that? Okay, I think there is some questions. Would like to understand, why did USD depreciate shortly after the release of ADP results, which was a positive surprise on Wednesday? Okay, basically, my view is that the ADP has almost no impact on the news. On the US dollar. Okay, because like I mentioned, the ADP release has eventually become less of a reliable indicator to the actual NFP figure. Okay, so my take is that the market is starting to grow out of the whole ADP being a good indicator of the NFP figure actual release. Okay, so the weakening of the US dollar has little to do with the ADP result. Okay, at that time was Wednesday, right? Wednesday ADP was released on Wednesday. Let me check this week. What time was it being released? 21:15. Okay, I would say it's probably because of the pre-market opening, all right? Because the US market opens at 22:30 GMT plus 8, okay? And the ADP figure was actually released at 21:15 GMT plus 8, an hour and 15 minutes before the market. So the movement may be because of the the pre-market opening of the equities market, okay? Yeah, positive surprise, but wasn't that reliable, okay? My take on NFP is they were fall short of forecast of 400,000, but slightly better than, sandwiched in between 210,000 and 400,000. But I don't know, man. Seriously, I can't really pinpoint a figure or a range of figure to fall at and things like that, because like I said, on one hand, on one side we have the Omicron issue, on the other side we have festive season, which may actually spur employment. So yeah, this time around, I don't really want to I'm not confident in either side of the data. Okay, so any more questions, feel free to put it in the Agrofin chat or before this session ends. Okay, but tonight I'll be around in the club, paying attention to the figures and break it down to you guys, break it down for you guys, on the report. Okay, if there's no questions for now, I will hand it over to Scott for the DXY.
All right, thanks, Gimme. Thanks for the questions, everyone, as well. And it has been a tough thing to do to pick NFP recently. And even if it's been not too bad, we've got all that other data that comes out around it. So Gimme and I were talking before the call started, and sometimes we can see a series of mixed releases, and it just causes a little bit of unsettling, and it just takes a little bit of time. So if you are trading around that release, just potentially wait maybe even 30 minutes for things to settle. If you are aggressive, that's fine, but just be aware that plenty of whipsaws can happen as well. And just looking at the US index chart now, this is the 4-hour time frame. Again, we've maintained this range, and with the release tonight as well, if everything comes out as expected and it's great, then that's the more simpler trade, with the US dollar very likely moving higher. But always sort of be ready for the unexpected to happen as well. We've sort of seen with what happened with the FOMC meeting, the US dollar really didn't gain a lot of strength, but we saw a lot of movements out elsewhere, obviously with the equity markets as well. But just to bring that up now, so something I like to look at is just with the NASDAQ here, and you can see it has got quite volatile as well. So this just represents a lot of these companies are high growth, and what that means is that they rely on having debt to facilitate the company actually eventually becoming profitable. So if we go to the daily time frame here as well, and we can see that it was held and the dip was bought, and that just means our participants are willing to support this rally still. If we just format that a little bit, we can see that it has been in an uptrend. Definitely found a bit of a ceiling here, at the 16,600 level. So just something to watch for, for tonight, with the NFP coming out before the US equity open as well. It should be interesting to see the reaction of this. And then, so it might just take 30 minutes or so, or even a little bit longer, for markets to really find where the path of least resistance is, so to speak. And that would be how I'd be approaching it. And for the US dollar, really, if I just go back to that as well, it's just going to be interesting to see how it does get through. Really 96.50 has been a little bit of an issue. And then obviously we've got even higher, where we recently tried to break through 97. I think it's just going to take a little bit of time, but eventually, really, it's going to be inevitable that once that first interest rate comes, it's just now a little bit choppy though. So if NFP is simple and it comes out better than expected, but I really don't think so. It's just going to be a mixed bag, and it just means being a little bit patient. But those are my thoughts on the US dollar. And again, like Gim said, he'll be in the chat and I'll be around as well, just in case there's anything that pops up. But going forward now, we do have the USD Cad, and we've also got oil to discuss as well with Gimme here. So back to you now, Gimme.
All right, I'm back again. So dollar CAD. Oh my goodness. Okay. As you guys know, okay, usually the first Friday of the month, when we have the NFP data release, we tend to have the Canadian employment report release as well. Okay, that makes things way more tricky when it comes to trading the dollar CAD. All right. However, okay, let's just look at the economic calendar again. All right, and we look at the employment figures being expected from the Canadian jobs market. All right, employment change. Okay, previous month, back in November, 153,000 jobs were being added. Okay, and then in December, right now we are actually forecasting only 27,500 jobs being added, kind of a data. Okay, this is actually quite a bit of slowdown. All right, whoever provides this forecast figure may have actually considered the fact that the Omicron variant has impacted the Canadian jobs market. All right, and unemployment rate is expected to remain at 6. All right, so look, we have an expectation that the Canadian jobs market may perform worse than previous data released. Okay. On the other hand, we actually have data from we are actually expecting the US jobs, jobs market perform better than previous data released. Okay. That is what I mean by one direction. Okay. Dollar CAD. On the dollar side of things, we are expecting to see better data releases. On the Canadian dollar side of things, we are actually expecting to see slightly worse than expected data releases. Okay, so if all right, the actual data releases for both sides of the countries, all right, turns out to be better than expected for the US side, and at least as bad as expected for the Canadian side of things, then we may actually be seeing a strengthening in the dollar CAD. Okay. Now, what is dollar CAD doing at the moment? Right. This is a daily time frame. Okay, and we can see that yesterday. All right, which is let me just put a line over here, which is actually, you know what? Instead of putting a line, I'll just put an arrow from now on. Okay, because it's probably going to be easier. Oops. So, okay, it's pointing the other way around, but okay, this candle over here, all right, this strong rejection from the top, okay, over here, you can see that it actually rejected the 1.28 round level, key level, psychological level, all right. And Scott and I, we were just talking about it before the call, okay. He actually told me that, I went to the chart and take a look as well. Oil price actually hit $80 per barrel already, okay? And it's currently trading around that level. Okay, just do a quick look at the oil price. Look, US oil, this is actually crude oil, okay? WTI crude oil. It is currently trading at $80.12 per barrel, okay? That is what is pushing the Canadian dollar higher, okay? Then back to dollar CAD, which explains why there was actually a strong rejection from the 1.28 level, okay, for dollar CAD yesterday. All right, and at the moment, dollar CAD is weakening. Okay, so which adds to another, which is actually another layer of complication to how we can actually trade dollar CAD tonight. Okay, in a scenario, oil aside, all right, oil aside for the moment, if in a scenario whereby we were to see a stronger than expected figure from the US jobs report, okay, and a weaker than expected jobs report from Canada, okay, normally we will be looking to buy dollar CAD, okay. Now, adding in this oil element, okay, with the strong, I would say, oil price at the moment, okay, that will definitely have an impact on dollar CAD. It is likely going to push dollar CAD down as well, okay. So how are we going to trade dollar CAD? Okay, basically, if you guys scalp, okay, if you guys actually trade at M1, can trade at M1, they are proficient in trading M1. I know some of the Traders Club members are actually quite proficient in trading M1 in scalping. I wouldn't want to name names here, okay, to keep our identity secure. But I know some of you guys can actually trade pretty well in scalping. Okay, so if you guys want to trade tonight for the NFP and the Canadian employment data release, okay, please just keep it to a very, very short time frame. Okay, some of you may be trading M1, M5, or scalping and things like that. But whatever it is, okay, if you guys are trading tonight, the news, all right, keep it short term. However, if you guys want to trade, if you guys are more like a medium-term trader, okay, like a swing trade or short term, but not intraday. Okay, you guys plan to hold trade overnight or over to the new week. Okay, which I personally don't recommend right now. Okay, because of too much uncertainties going on. But if you guys are planning to do so, or longer term trades, all right, then like what Scott mentioned earlier, wait for some 30 to 40 minutes after the news release, wait for price to settle, get a more reliable sentiment from the market as to how dollar CAD should be moving, okay? After digesting the jobs report from US, from Canada, and of course, the current rising oil price, okay? And then, let the market form its sentiment, let us get, an overall view of whether dollar CAD should be moving upwards or should be moving downwards. Then look for an opportunity, okay? Because the last thing you want to do, okay, is to short dollar CAD, okay, where they actually move down by a little bit, okay, and then 30 to 40 minutes later, okay, it actually went back up because it can be because the FOMC is very hawkish, so the general market sentiment at the moment is a stronger US dollar against the Canadian dollar, the kind of thing, right? The last thing you want to get caught in is this kind of situation. So 30 or 40 minutes later, once the market settles down its sentiment, get a more reliable sentiment, if it decides to move up, then you look for buying opportunities, or you decide to scrape your idea of selling dollar CAD, you guys can save quite a bit of money as well. All right. So dollar CAD, you want to trade? Yes, short term. All right. Now, oil. Would you want to trade oil? I would say, if you want to trade oil, keep it short term. Okay. I would say I would pay attention to the most recent high of, I would say, $85 per barrel level. Okay. Right now it's trading at 80, okay, 80.16 dollars. Okay. I would say oil a bit tricky, okay, but at the moment it seems to be strengthening because of the recent OPEC meeting, and it is said that Omicron definitely will have an impact on the oil price as well. Okay, so keep your trades on oil short term as well, because you never know what's going to happen at the moment. Okay, countries around the world may hopefully not, okay, may actually tighten COVID restrictions, okay, and that will likely have an impact on oil price, okay. But at the moment, we are seeing a strong rally in oil price. Hence, if you guys want to trade, I would definitely look for buying opportunities. But I would definitely not hold my oil trade over to the new week, next week, okay. So that's for oil, and that's for dollar CAD. Any questions? Any live NFP trading tonight? Unfortunately, no, Leo. There won't be any NFP trading tonight. But like what Scott mentioned, okay, both of us will be around. So you guys, to break down the news for you guys, to give you guys any trading opportunities, okay? Because although today is dollar CAD, okay, we may want to trade CAD yen as well. Actually, you know what? Let's just take a look at CAD yen. All right, let's just take a look at CAD yen to see how it's actually moving. If you guys want to remove the whole US dollar element, okay, look at CAD yen, look at CAD francs, or look at the other cross pairs, maybe like pound CAD or euro CAD and things like that. But just pay attention that in order to trade those pairs, you will need to know the fundamentals of the other side as well. Okay, for CAD yen, why do I suggest CAD yen is because like I've mentioned already several times, the economic indicators for Japan, okay, and the monetary policy updates coming out from the Bank of Japan, usually, especially during this period of time, have little impact on the Japanese yen, okay, because of the ultra low inflation in Japan, okay. We are seeing record high inflation level in many of the developed countries, but we are not seeing a strong rise of inflation coming in from Japan, okay, which is why nothing beats the inflation data right now for Japan, all right, which is why we are trading the Japanese yen, treating it as a safe haven currency, okay. So in a scenario whereby the Canadian employment Canadian employment figures, okay, let me go to the economic calendar, turns out to be better than forecast of 27.5K, okay, or better still, if it turns out to be better than the previous 153.7K figure, okay, no doubt we are likely going to be seeing a strong, what do you call that, appreciation, a strong strengthening, okay, in the Canadian dollar, okay. And of course, unemployment rate, if it actually declined further, okay, below 6%, which is getting very, very close to the pre-pandemic level. Okay, I don't have the figure at hand right now, but anything lower than 6 will definitely bring it way closer towards the pre-pandemic unemployment rate figure level. Okay, so if we were to see positive data released from the Canadian side of things, then it is likely that the Canadian dollar will strengthen, okay, against the yen, against the what do you call that, the safe haven currency, okay. And you see over here yesterday, okay, the Canadian dollar actually strengthened against yen. Once again, it's because of oil price, right? See over here, the Canadian dollar actually receives a boost from the rising oil price. And if let's say the Canadian employment report were to be, better than expected, okay, that will be a double boost to the Canadian dollar, okay. So if you guys want to trade, another pair to look for trading opportunities would be Canadian yen, okay. And then I will skim through the charts later on any Canadian related pairs, and then I will put on the Traders Club, put in Traders Club to see if you guys are interested in trading those pairs as well. Otherwise, yeah, dollar CAD would be a generally, I would say, tricky pair to trade, okay. So any other questions on CAD in general or oil in general? Okay, if there's no questions, it's Crypto Week, Crypto Friday, okay? So I'll hand it over to Scott for his analysis on crypto. Back to you, Scott.
All right, thanks, Gimme. So just to get going, we'll just start with BTC against the US dollar. And just on the daily time frame, you can see that it's been pretty tough to maintain conviction when buying the dips here. We've seen a little bit more support at around 40,000 or so, and we're just going to have to wait and see what happens. Now, what people have been talking about with crypto, especially BTC, is that it's a inflation hedge, but it hasn't really been performing like that. What we have been seeing is people have been flooding into high quality stocks with not much debt. So, such as what's been happening with Apple. And if you have a look at Apple, that's something very apparent, because it's almost like being in cash, because they have really not a lot of debt. They're quite a good solid company as well. So from a fundamental perspective, that's what we've been seeing. We haven't really been seeing, if that was the case with the inflation situation, well, it's sky high, and BTC has been, people have been leaving, because what happens when a state of panic exists is that you get rid of things you don't, really need. So people just are getting, margin called, and it's going to be very interesting to see what happens, leading into the next FOMC meeting as well. But I would say currently for both BTC and US, BTC and Ethereum, not really the time where I'll be looking to enter back in on these. I don't hold any crypto. I did, and I was getting out as it was sort of moving a little bit higher in October. And I think revisiting this, at least once it's below 30, even, lower, down at the 29s where it was in 2020 would be, or 2021, sorry, is sort of more favorable. And including for Ethereum, just to discuss levels, it's definitely, it's with Ethereum, it's just, let me bring up, let's go Ethereum. There we go. So again, it's just tough to say, you want to see some confirmation. Now, this obviously happened where the dip was bought in early January, but I think the realization now with what the Federal Reserve is going to be doing with that FOMC meeting minutes that Gim discussed as well yesterday, it's just a tough one. And, again, some support down at 2,800 or so. But yeah, right now, just staying away from looking to buy the dip here on both BTC and Ethereum too. So I will share the trade ideas as well on the USD Cad. Again, short-term focus tonight, guys, with what's happening in markets. But those are my thoughts there on crypto. So keeping it simple, just nothing exciting to report. I think some more selling is going to be present, but that is it. And I think that summed it up for today, guys. Thanks again for joining us. And again, any questions, please feel free to leave them in the chat for the LCMS Trading Club members. But thanks for joining us this week, and have a great weekend, everyone. Thanks for tuning in.